What's going on, everybody? It's Rod with POW Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Today is Monday. It's July 8th. Hope you had a great weekend. And in this video, we're going to do an update on the SP 500. We're going to take a look at the SPY ETF, and we're going to be discussing how high can it go. I do think that the top is getting very, very close. We need to be very cautious now and selective with regards to bullish entries. And we'll take a look at a couple of bullish patterns. We were discussing this in the POW Group private community today. And I also send out an alert to the group, just, trying to get everybody to prepare now, because you don't want to be a deer in the headlights. You don't want to be caught off guard, and you don't want to be making decisions on the fly. That's how we get emotional and make decisions that are less than ideal. So we're going to take a look at a couple of targets, but I'm seeing 610, 620 as a potential top area on the SP 500 and on SPY ETF. We'll get to that and more in just a moment. Before we do, make sure to smash the like. It helps support me in the channel. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. As always, this is not financial advice. I'm not a financial advisor. This is for entertainment purposes only, and you should never ever buy or sell anything based on anything that I say or write. Also, you can follow us over on X, formerly Twitter. The handle for that is @GroupPow. I'm going to be using that as my platform of choice going forward. Before we get started, I want to thank our sponsor of today's video, and that's BitGet. BitGet is a leading crypto exchange with over 25 million users and 10 billion in USDT in daily trading volume. BitGet also offers a variety of trading options and has the largest crypto copy trading platform. BitGet also has great transparency with industry-leading proof of reserve ratios. If you'd like to learn more, please visit the link in the description. You can earn sign-up bonuses by using our link, and it also helps the channel out. This is a paid promotion and collaboration with BitGet. If you recall, I posted a video, this is about a year ago now. If I could just get the exact date here. Yeah, it was over a year. That's crazy. So this was posted on March 13th, 2023. And I posted this video knowing that, the top of the market probably wasn't going to be, right after I made this video. I even said in the video that it could be 6 months, it could be a year from now. And I'm still kind of echoing the same thing. We don't know when the top is going to come. One thing is for sure, it will come, right? It's not a matter of if, it's a matter of when. You really need to prepare because, like I said, markets can do one of three things: up, down, sideways. We know that we're going to be met with some aggressive downside eventually, and it's better to prepare now. It could come as early as next week. It could come next month. It could come next year. But preparing now and having a plan and a hedge, whether or not you're going to short the S&P 500, keep money on the sidelines, right? Diversify, all of these things. Again, check out that video for the top 10. Fed to cut rates in September as well. So these are things that I'm looking at as a potential top indicator. So if the Feds, which I think is the most likely scenario, if they cut in September, I think that is very high probability of playing out. If they do cut in September, then that's going to be one major signal that the top is in. And generally after they cut rates, it's usually 3 to 6 months worth of bull market left, and then we enter a pretty brutal bear market. And I think this bear market that's coming up, whether it be this year or in 2025, I think that it could span multiple years, and we could see a 40, 50+% pullback on the S&P 500. Another thing I'm watching for as a potential top indicator is Congress being banned from owning stocks. And this time it's coming from a Republican. This is a nominee. But he says that, he sold his business, he sold all of his equities, he sold all of his crypto, and because he doesn't think that they should own it, right? It's a conflict of interest. And he thinks that, people that are in power or in, making lawmakers or in Congress, they should forfeit that right? If you're working for the people and for your government, right? If you're in, whether it be the executive branch in Congress, you should not be able to own stocks, crypto, financial instruments, anything like that, right? Because there's so much insider information. So I do think that this is going to be another top indicator, and I think it could very well come sometime this year, if not early 2025, and that's going to be another major top indicator that I'm looking for. So that, along with rate cuts, I think if we get one or two of these, if we get two of them, then I think the top is definitely in at that point. But if we get one or two of them, then that's going to raise an eyebrow, right? We're going to really start to look for that top in the market. There's no major red flags just yet, and we'll bring up SPX here. This doesn't even factor in dividends for the S&P 500, so SPY ETF. So I'm going to bring up SPX right now, and it's just a little bit cleaner on this chart as well, and I'll bring up SPY in just a moment. But there's a couple of bullish patterns that we're looking at. The first one is a cup and handle, and the second one will be a monthly bull flag. I've already covered that pattern and target a few times on different videos, but we'll revisit that in just a moment. But one thing, this is what we were discussing in the Power Group private community today. It's pretty much a textbook cup and handle. So you can see here, the cup started to form in the handle, and then the handle started to form, and it's essentially met with a bull flag. So if you take a look at the macro here, this is on the weekly time frame, you can see here perfect cup, and then like I said, that handle, we generally don't want to lose the 0.32 fib, but it dipped slightly below it, so we'll consider that a save. And in my opinion, if you take I think it's going to be a measured move of about 610. So if we take a look at SPX, it's 6,111. So, and this is on log scale. So I generally use logarithmic. If you're a chartist or a trader, then generally use log scale. So I use log scale probably 95, if not 99% of the time. I find it to be that much more accurate. So if we take a look at our measured move, it's saying about 6,111, which would be around 610 on the S&P 500. So now if we bring up SPY ETF, we also have a monthly bull flag as well that I've covered a few times, as I mentioned. So if you take a look at the SPY monthly bull flag, you have your low, you have your high of the bounce. We held that 0.32 fib. Actually, we held the 0.236. We didn't even dip below that. So it was a very brief consolidation pattern. And from there, we saw another monthly bull flag confirmed. If you take your measured move from the low to the high there, so low, high of the bounce, high or low, held the 0.32 fib, and it's saying the measured move, if you take your trend line, go from the low to the high, move it out to your 0.32 fib, it's saying we're targeting roughly 620. So I think somewhere around that 610, 620 area is going to be the area that we're going to be targeting here for a blow off top moment. And if you take a look at where we are now, we're only from that monthly bull flag target, we're only about 11% away. And if we bring up SPX as well, we are only, from current levels from the cup and handle target, we're only about 9.5% away. So we're getting very, very close to that at the moment. And then we're also seeing this hidden bearish RSI divergence where we're trending with lower highs, lower lows. Probably going to be more clear if I zoom out to the monthly. There we go. So you can see here we have lower highs, lower lows, and then higher lows and higher highs on the price action. So we're breaking to the upside on the price action, but yet the RSI is still trending lower and seeing that hidden RSI bearish divergence. So something similar happened back in the .com days as well. If we just zoom out to the 2000s, you can see here we were lower highs, lower lows on the RSI, and then eventually we broke down and went to monthly oversold. Same thing here, higher lows and higher highs, price was breaking upwards, and then we were going the opposite way on the RSI, and then eventually we topped out, and then from the high to the low, we pulled back about 50%. So I think something similar is going to happen where we could shoot up to about 620, 610, 620. So let's just say 620 on the high end. Let's just say we saw a 50% correction from 620. That'd bring us down to around 300, which I remember when we crashed down in March of 2020 and then we came back up to 300. Everybody's like, oh, I'm going short. Obviously, we're not going to get that much, further ahead than 300, right? And then that was the previous all-time high as well. We had 316, and then we had that massive sell-off in C19. And then once we got back up around 300 level, I remember everybody saying, oh, I'm definitely shorting the S&P 500 above 300. That's where we're going to top out. And here we are getting close to 600. So it can always keep going a lot higher than we think, right? And it's almost like an Energizer bunny at the moment, right? The Energizer bunny keeps going and going and going and going, right? So at the moment, it's definitely that. It's going and going and going, and it's going to feel like it's going to keep going forever. And then you'll wake up one day, 1 week, and it'll just be an absolute bloodbath. Then we'll probably see a type of relief rally and dead cat bounce, and then we'll see a retracement, and then more than likely monthly downtrends confirm where we come down, see a pretty sizable correction on the monthly time frame. And then we see, let me just get the brush target here to kind of give you an idea. So we would see a lower high and then a lower low. That'd be your dead cat bounce and your relief rally. And then we would more than likely retrace, come back down, and then confirm that monthly downtrend. So if we see, like I said, a 50% correction, that could bring us down to around 300. I think we could even see 60% this time based on the amount that we've gone up, right? Like I said, from March 2020 to current levels. Whoops, let me just bring up the tool here. From March 2020 to current levels, we're up about 170%. Like, that is wild. So if we're accustomed to 12 to 15% per year on the S&P 500, like I said, we've got about a decade worth of gains in just a few years. So we definitely have to be cautious at this point. And like I said, if we were to see a 60% correction and we go all the way up to, I won't use the current level, but if let's just say we use 620 as our top, that's roughly, if we saw a 60% correction, that'd bring us down to around 250. Let me just bring it up here, 620. And then I'm just getting a rough one here. Yeah, so 60% correction would be around 250, 240s, which I would not be surprised in the least. And then also I took the fractal from the .com days and put it over this top here. And we were following it very, very closely. But then I said, because of the artificial printing of money and the Feds banning themselves from owning stocks, Congress still being banned from owning stocks, I figured that, there was so much more manipulation this go around that we more than likely wouldn't see that. So if we just move it out to, let's say, 620 as our top, and let's say we hit it over the next several months. So there's our 620 target. Just bring it down here. So then this is saying somewhere around that 300 level. So I think it could even be worse than that. I think we could probably drop down into the 260 to 230 range, like I said. So again, now's the time to prepare. We like I said, it could pull back 5 to 10% any week now, but then I think that would be one final dip before the last rip, and then I think the final dip buying opportunity, and then more than likely going to be a multi-year bear market. So hopefully this video was helpful. If it was, make sure to smash the like and drop a comment below. Let me know your thoughts and opinions. In terms of the weekly time frame, no major red flags here whatsoever, but I just wanted to highlight the fact that we're getting really extended to the upside and way, way, way above our weekly moving averages. So you can see here the next closest nearby weekly support is at 484, and that's the 50 weekly, and then the 200 weekly is all the way down at 428. So when we get extended to the upside like this, we generally come back down and test it as support. Sometimes we confirm it as resistance and we continue lower. So when we gravitate away from these, we usually come back to them, right? We usually gravitate back towards them. So when we get extended to the upside, we gravitate back toward it as support. We get extended to the downside, we gravitate back towards it as resistance. So I would expect us at some point soon to come back down and back test those. We also have the 50-day moving average at 530 and the 200-day at 488, which we're getting extended from those as well. So now's the time to be fearful when everybody else is greedy. Like I said, I think we could see one more final blow off top moment, but I think we're going to see probably a 5 to 10% correction very soon, and then we'll more than likely pull back for one final buy the dip moment, and then we'll see that final blow off top euphoric rally where everybody, like I said, whether it be rate cuts, whether it be that and a combination of Congress being banned from owning stocks as well. There's so many variables, but that's what I'm looking for as, trying to cut out most of the noise, and that's basically what I'm looking for. And then looking at those two bullish targets of 610 and 620 as our top area of interest. All right, going to end it there. It's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth, and we'll see you again in the next video.